like to know how much our loans or our EMIs are going up and how much we earn more in our deposits. Shanti Ekambaram from Kotak Mahindra Bank has joined us. Shanti, thank you very much. Well, first up, for several banks, are deposit rates likely to rise a little more than lending rates?
So firstly, Lata, I think deposit rates have been rising in tandem with rise in repo rates, and keeping the credit growth that is strong in the system. Deposits have been and will be center stage for most banks. So I think it really depends upon the demand and the supply. And if banks have less supply and more demand, that they have need for money, they will rise rates. Different banks will take the alcos of banks will take. But I think you can expect some marginal rise in deposit rates on the basis of what you have seen as a rise in repo rates. But I think banks have already taken the steps that they need so far in mind.
Okay. No, I'm asking because everyone knows that if the repo rises, all the lending rates linked to repo will increase. But we don't get a very good handle on deposits. So I'm asking you if in the next quarter, you are expecting another quarter basis point hike.
So Lata, that's what I come back to say. It really depends upon the demand supply for money, because each bank looks at what is their likely growth, which is the demand for money, what is the supply they're getting from CASA, what is the liquidity, and then they decide based on their deposit rates. I think banks have moved pretty significantly in the last, I'd say, 6 to 8 months on deposit rates. And in my mind, it could move up marginally. And if the credit growth continues to be strong, you could see, a continued tandem between the deposit and the lending rates. But it's really a demand-supply mix and how liquidity is going to play out from here.
I agree. So you are better placed to gauge that demand. So I wanted to know whether you think that as lending rates rise, 6.5 for the sovereign, and probably 7.35, 7.4 for the 10-year. Do you think that demand could peter out, could plateau a bit or slow a bit?
If I heard the governor, and in fact, that is one of the surprising parts, I actually found the estimates of economic growth and inflation for next year higher than what most economists had, put out or even anticipated. So if the economic growth continues to be strong, and you saw that at 6.4 estimate, I think the street economists were at 5.6 to 6%, then the demand and supply, the demand for money is likely to continue. You heard the governor say buoyant, sectors, urban consumption, rural coming back, and all the various agriculture better because of the Rabi crop. If that happens, and let's say if the world recession is not as bad as one expected, which is also perhaps why they've kept some buffer in the policy on the inflation side, then you could see the growth, Indian economic growth higher. If there is growth, then there will be demand for money. If there's demand for money, depending on the supply, right, you could see a marginal rise in deposit rates, which is what I'd said right at the beginning.
All right, Shanti, hi, this is Ritu. Let me come to the other non-policy announcement as well, and the one regarding penal interest rates charged by banks that are varying, and RBI finds excessive in some cases. Of course, they're different across banks, but what is your sense overall with these draft guidelines coming on? What would be the impact?
So firstly, as you know, the penal rates are actually set as a policy and is approved by the board of the banks. And if you look at across the industry, there is more or less, they're all in range. And there is a penal interest and there is a penal charge. It's reasonably in line. We have to wait to see the draft guidelines to check what is it that is being seen as excessive. And obviously the draft guidelines will be viewed and we would give all, feedback. So we really need to see whether this excessive will, impact banks, non-banks, I don't know. But I'm saying it's reasonably standard across the industry. It's a part of the contract which every customer signs. So I think we have to wait and see what exactly is the draft guidelines referring to.
Shanti, the other thing also that the governor brought up was expanding the scope of the threats. Now, what they've said is that insurance facilities will be permitted on it. They've also said secondary market operations will be enabled on the threat platform as well. Do you think, sum and substance, will this move the needle for small entrepreneurs, for MSMEs?
So if you look at what Threads has done, Threads has actually brought the rates pretty competitive for whoever is accessing the platform, at least on the supply chain, which is, the buyer's credit, etc., has been reasonably, you've seen that there has been competitive rates. I think by developing a secondary market for receivables, I think it will deepen the market and thus, make it competitive as well as a reasonable rate for MSMEs. I think it's a very good move. I think what needs is that more and more people need to get onto the platform. More and more there are buyers, there are sellers, there are discount, there are financiers. I think it's a good move and will be able to provide liquidity at a reasonable rate to the MSMEs if this really is played out well.
Okay. Well, Shanti, we will invite you for a separate chat on Kotak Mahindra Bank some other time. Thank you very much for joining me. Between Ritu and me, we have eaten half of business lunch. So we wind up on the note that the Reserve Bank has left it ambivalent on what they will do in the next policy, whether it is a pause, have indicated that they would be pretty much data dependent, with an indication that they are still cautious on inflation. That's it on the special coverage of the Reserve Bank of India monetary policy and the following Governor's press conference. It's over to business lunch after a break.